Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Nick W., Brian H., Paul M., and Andy S. We've got a new guest on the program today, and one we're pleased to have with us. Mr. Drew Clark is on the program. Drew is the president and CEO of Summit Royalties, a newly listed royalty and stream business that is focused on precious metals, underpinned with a handful of existing productive royalties and streams that are cash flowing for the company. The company also has a growth portfolio of development stage and advanced exploration stage royalties across multiple jurisdictions. Summit Royalties is listed on the Toronto Venture Exchange under the symbol SUM. Mr. Clark, welcome to Smith Weekly Discussions.
Thanks for having me, Andrew. Good to be on.
Yeah, Drew, good to have you on the program for the first time. And I know you've been quite busy getting Summit launched and looking forward to talking about this new royalty business. But first, why don't we get your background and experience in the junior natural resource sector and, of course, the precious metals royalty and stream business?
Okay, yeah. I've been in the sector for almost 20 years now, which seems like a long time when you think about it. I started my career as a research analyst at CIBC, worked my way up to full-fledged analyst at the age of 26 out some of the intermediates. I have a Bachelor of Commerce and Finance. I have a CFA designation from an educational standpoint. My sort of more entrepreneurial side of me took me to the issuer side probably about a decade ago. Primarily, my first stop was at Premier Royalty, which was acquired by Sandstorm. I also worked at a company called Carlisle Goldfields that was acquired by Alamos. I did a brief stint as an investment banker, then found myself as employee number one at a royalty company called Metalla. We took that from a $30 to $900 million market cap in Canadian dollar terms. I've completed about well over 30 royalty transactions in my career. I love the space. I'm a self-proclaimed royalty nerd. And when I'm not working at a royalty company, I'm typically advising royalty companies. And that lent me, after leaving Metalla last year, to start this company. And it's been a great success so far. And I've been very humbled by the people and the portfolio we've been able to put together.
Good, flavorful background, and definitely all the components you would need to get into this business, which is quite an interesting, quite small niche business for precious metals specifically. So very interested to hear more about Summit here. And of course, the reason for you setting that up. And with that, what opportunity did you see, Drew, when you decided to form up and launch Summit, around a year ago abouts? What was the thinking, as you looked at the business out there, the environment for precious metal royalty and stream businesses, the major and mid-tier segment being consolidated over the last few years? What was the logic for Summit to enter the space and compete?
Quite simply, I love the royalty model. It's superior to exploration, development, and producing stories for quite a few reasons. We saw an opportunity to transact with IM Gold and start a new vehicle. There is a sort of underserved part of the market, which is in the sub-billion space, where a well-formulated management team like ours with a tight capital structure can do a lot of damage. And that namely is in the secondary market to scale up. I guess the conversation here always lends it to, well, it's a crazy competitive business, and it is. But we saw a ton of opportunity in front of us and decided, instead of sort of partnering up with an existing royalty company, why not start our own? And we went out and endeavored to build a company at a breakneck speed. So I guess it was more the opportunity we saw ahead of us more than there was this magic way about doing business that was special or different than everyone else. And look, I think we've built a very compelling portfolio so far, without going too far down the road with what we've done. Starting in May, we started with 0 royalties on May 29th. Today we have 47. We were kind of an idea at the beginning of the year. Now we're cash flow positive. So I think the success speaks for itself, and we're just getting started. We're excited to keep building as we continue to scale up the business.
Good progress this year. Congratulations on the transactions you guys have completed this year. It's been quite rapid. As you said, they're already cash flow positive here. good stuff there. And of course, I know you guys are hungry for more transactions out there. And of course, we know that network is very important in this segment of the junior natural resource sector, very important, and of course, the broader business as well. With that, any comments as to how investors, the audience, should look at the precious metals royalty and stream segment, and what key areas would be important both for them and also to you?
Well, I mean, the segment itself is incredibly special. I think the royalty sector in and of itself, and I'll do a little bit of sort of generalization on the sector as it is. I mean, it's gone from in the last 2 decades, basically my entire career in the space, it's gone from a few $1 billion to over $135 billion. So the success of the business is well sort of documented from a quantitative basis. But I think the reason that people gravitate towards it, and this transcends to the Summit portfolio as well, is royalties just don't carry the risk commonly associated with conventional mining from the grassroots explorers to developers. And those principally include inflationary cost pressures related to operating, constructing mines, and the higher level of asset concentration that you will see in most mining companies. I mean, just a quick reminder, everyone, these are free carried interests on a Miller property with no ongoing capital contributions at all. As these mines continue to expand production, as these mines continue to find more resources, that accrues to the bottom line. And the real magic happens when you actually aggregate these all together, and royalties trade at a premium to what you kind of can acquire them on their own. And that model is special, and it is no different to us than it is to a Franco-Nevada or Royal Gold or any of our peers. So the model is as strong as it's ever been. And I can't recall if you asked how this transcends into Summit, but we kind of have a lot of those ingredients in place right away. Good management, we'll talk about more, good capital structure, stuff of that nature, and the valuation is extremely compelling. But we're coming out of the gate with revenue and cash flow positive on day one. We can't stress enough that these royalty companies need to be able to run themselves and not be beholden to investors, capital to pay management, G&A, and pay for us to market the company. And a lot of our assets are in the early innings of their productive life. So we see a lot of accretion on all of our assets, not just with the drill bit, which is kind of common in most royalty companies. We see a lot of throughput expansion within our portfolio. And I'd say the easiest thing about our royalty portfolio, and this isn't a knock on others, I mean, every royalty is unique. A lot of our assets are very easy to understand. We cover the whole ore body, with the exception of maybe one notable one. And it's just a very clean and easy business to understand and promote.
Absolutely agreed with that, and definitely something that should be part of an investor portfolio. As anybody in this sector, this is definitely an important thing to be into as far as allocation goes. We agree with that as well, that it does make a lot of sense for investors to consider. And if you have companies that are covering their costs, putting away capital in the treasury, plus being able to do good transactions with that capital and grow the business like you guys have already started to do, that's fantastic. Why don't we talk some of the current productive key assets of the company? We've got a silver stream on Orzone's Bombore mine in Burkina Faso, a gold NSR in West Red Lakes Madsen mine in Ontario, Canada, an NSR on Denarius's Zancudo mine in Colombia, just to say a couple starters that are actually cash flowing at this point or will be very soon, as far as payments coming to the company. You also have two key development stage projects, Drew, that I think are worth talking about with near term and medium term production expected. Just go through some of those for us and how you're seeing them as far as priority, and walk us through some of those key assets.
Absolutely. So the iron gold portfolio brought most of those productive assets you just referred to, being Bombore, Pitangui, and Zancudo. So I'll talk about Bombore quickly. Bombore is a 50% silver stream with a minimum guaranteed delivery of 37,500 ounces annually. Bombore is operated by Orezone, which is an incredible company. It's about a $500 million market cap. They have raised over 150 million since we acquired the portfolio and have announced not one but two expansions to their gold plant. They're currently transitioning from the oxide plant to an oxide plus hard rock plant or sulfide plant. They're taking production from 120,000 ounces last year to 250,000 ounce run rate by the end of 2027. And the thesis is simple. The silver is a bit of an afterthought within this ore body. More gold equals more silver. Principally, the relationship between the gold and silver has been about, for every ounce of gold, there's about 0.25 ounces of silver. And our technical due diligence and our conversations with management indicate that that relationship should hold. So we see this silver stream that settles monthly, and we're cash flowing silver at over $50 an ounce right now. We think that's going to grow materially over the next year and a half to 2 years. By the way, this is all fully underwritten by company guidance in their presentation. I encourage anyone to go to the Orezone website and look at their guidance as for their expansion plans. But what's really unique about this stream is that there was a 37,500 ounce annual minimum that I mentioned earlier. And when they originally put this stream in place, the thought process was that for every ounce of gold, about half an ounce of silver would be recovered. And I just referenced earlier that it's actually been 25%. So that minimum is actually owed to us by the end of 2027, maybe early 2028, depending on when debt repayments and some of the events are triggered. We're actually owed roughly 70,000 ounces of silver from Orezone. And at today's spot prices in silver, that has certainly been a material growth in that contract value for us. So it's an awesome ore body. There's 14 kilometers of productive mineral trend. The average reserve depth is less than 100 meters. It's a really, really well-run company, and we love that asset. It more or less paid the bills from day one. So when we acquired the IAMGOLD portfolio, that was the one that we were excited to get. Most recent royalty that we purchased, and this was during an RTO, was on the Madsen mine. I can actually report this morning that Madsen announced a 23% increase in throughput this month over last month, so for September to October. It's currently ramping up. They're openly guiding for somewhere between 50 and 60,000 next year, but let's just use 50 because that's the number that they've cited. 50,000 ounces at 1%, that's 500 gold equivalent ounces to us. Use any gold price you want there, but we're expecting good cash flow to them next year. We love the ore body. There's over 2 million ounces in the resource category and a ton of throughput expansion upside there. And the one thing I didn't highlight with Orezone, because it is actually being expanded currently, all of our assets we're going to talk about have real throughput expansion because they're early on in the life. Madsen's currently operating at roughly 650 tons per day. It's going to 800 tons per day as it's rated. The mill can actually do close to 1,100 tons per day with a small permit amendment, and there's conversations about expanding the mill down the road as they continue to open up more faces. But we see Madsen as a long-serving asset for us that'll pay us, well into that sort of 500 to 800 gold equivalent ounces for a long time. There's a really good mineral endowment there. We bought that from Sprott for $8 million upfront with $2 million in contingent payments. Rounding out the portfolio, going back to IAMGOLD, we talked about Pitangui, or you mentioned Pitangui earlier. This was sort of the crown jewel of the acquisition when we made it with IAMGOLD. We get $80 an ounce for the first 250,000 ounces of gold, and then a 1.5% thereafter. Those 250,000 ounces at $80 an ounce, that's 20 million in revenue right away, just to give you a sense of the quantum that this mine will produce for us from a capital perspective. It's near the Turmalina plant. It's about 20 kilometers east, and it's going into production next year, or development next year, with production slated for 2027. One thing I really want to highlight from a development standpoint, this isn't our estimate, this is management guidance from Jaguar. It is over half of the reserves at the mine complex there, and about a third of the global reserves. They have 2 operating mines in Jaguar. Just for your listeners who aren't familiar with them, Jaguar is about a $300 million market cap. They've been operating in Brazil for 20 years. They're a great counterparty, and they're excited to put this thing to production. This was actually acquired from IAMGOLD in 2023. They acquired it for shares and a royalty. Rounding out the portfolio on the operating side is the Zancudo mine. Zancudo has been ramping up a little bit slower than I think they had anticipated, but we're excited to see that it is in operation. It is doing a bit of a direct DSO operation to their offtake partners at Trafigura. But I think it was about 2 weeks ago they received a permit to install a 1,000 ton per day mill. That should be up and running sometime in the first half of 2026. The run rate on that mine should be around 80,000 gold equivalent ounces. We have a 0.5% on it. It's not a big part of our NAV and not a huge part of our production profile, but it's certainly nice to have a little bit of cash flow coming from a well-known operator. Denarius may not be as well known as its predecessor management team, which is Aris Mining. They built the Segovia mine, which is the largest gold mine in Colombia. That team that built and operated Segovia has built and is operating Zancudo. So this is a team that's been there and done that, and there's a lot of exploration potential on the property. Rounding out the portfolio, and probably one of our most exciting assets, and one that I believe actually has the most upside not recognized in our share price, is the Ormac deposit. Ormac is a nearly 8 million ounce project in the Yukon. It abuts the Keno Hill mine that's in operation right now, being run by, was formerly Alexco, now it's being run by Hecla. It's nearby the Victoria Gold Eagle mine that's currently in receivership, but is being sold by the end of the year. It has extremely good infrastructure. But what we're really excited about it is, and our royalty doesn't cover the entire ore body, it covers all of the airstrip deposit and the western extension of the power line. Almost all of the drilling that we've seen this year has been right on our claims. We have a 2% on the airstrip deposit, and we have a 1% on the power line deposit in the western extension. And it looks like most of our royalty covers all the indicated resources. This is a lower grade, I wouldn't say low grade, but lower grade milling operation in the north. Tara and her team are publicly stating that they're looking for a starter pit of 5 million ounces at gram per ton plus. She has indicated about half of that comes from airstrip. We have a 2%, and a good chunk of that would obviously come from power line. We think from a gold equivalent basis alone, I mean, if you do 2% on 2,500 ounces, you're looking at 50,000 gold equivalent ounces. Pick your gold price. There's a tremendous amount of value there that'll be unlocked as they continue to expand that ore body. And not getting too royalty nerdy here, but what I think is really impressive about this asset is not only is it going to grow, and we're very bullish on the gold price, the multiple that investors are going to pay or should pay for an asset like this will go from sort of a 0.4 times the price to NAV to 0.8 to 1.2 as it goes from an idea to a PEA to having a real operator have it put its hand on it. We see this being a jewel in the portfolio that will add tremendous growth potential from a NAV perspective, and could really be an accretive asset within the portfolio. Worth mentioning here, and I'll talk about some of their assets if you want. We've only really touched on 5 of our 47 royalties. We have other active assets that are being drilled right now. Some of them are on 6 million ounce extensions in Quebec and First Mining Finance. Buenaventura San Gabriel mine is going into production. We have the extension of some of the resources coverage there. We have a tremendous amount of optionality in the portfolio. And the best part about it is, and I can't stress this enough, investors don't have to pay for it. The 5 assets we just highlight kind of make up way more than 80% of our net asset value when we present it to investors. So there's a tremendous amount of optionality in the portfolio, cash flow growth coming from active participation in the metal price, because a lot of our assets are in production or are coming online next year. And there's a tremendous amount of drilling going on all our properties. So it's a really awesome portfolio. It's got a lot of balance in it. And we love that we have a silver stream, and then we've got that gold, passive gold revenue line coming in as well. I think it's a good marriage of metals.
Drew, thank you for walking us through that. So quite a bit of stuff happening here. Definitely, it provides tremendous foundation to build on and grow this company. And of course, we'll talk a little bit more about the exploration and royalty portfolio here in a moment. But certainly, you have stuff pretty much every year until 2030 coming in presently, and that doesn't even include the work you guys are working on now and into 2026, which we'll hear more about in the coming months. But definitely, it provides a great springboard. You guys have capital coming in, which is tremendously important for a royalty company to make more transactions later on down the road, plus look at capital allocation, whether it be new transactions, whether it be return to shareholders, what have you. Why don't we just talk briefly, get your comments on the exploration portfolio here, just as far as any key projects you'd like to mention that has significant growth potential, something you're excited about over there that you guys have in the coffers. Anything you want to mention on that that's moving from exploration and maybe looking towards development stages?
Yeah, okay. And I touched on some of them earlier, but outside of the 5 I just highlighted, one that probably has the most excitement for us out of the IM Gold portfolio, we'll just stick with that for a bit, is the Akuri royalty that we have. It's on a large land package near a previous operation with an operating mill. And the Jaguar team put out something that I thought was quite incredible, where they actually put out a 5-year exploration budget and timing and the assets they're going to be targeting. And that included our Pittingui asset we mentioned earlier, but Near Akuri is the Santa Isabel and a couple other drill targets that are right next to a mill that's fully permitted. We see the opportunity for that to turn back on. The current drill bits are not turning on our ground, but it's adjacent to ours. So we see real potential for an aggressive and recapitalized and reinvigorated Jaguar team to actually start tagging into some of our assets there. And there is historic resource estimates on our ground. We did talk about First Mining Finance earlier. They just went into a new target, I believe it was called Miroir. That is right next to our grounds. That's a 6 million ounce trend that goes right into our grounds. Another one that we don't talk about much, and quite frankly, we're getting more excited about, is the San Gabriel mine. San Gabriel is being put into production by Buenaventura. We love this because it's a well-capitalized, well-operated mid-tier mining company. They're putting Buenaventura into production as we speak, and the resources go right on our ground. We love owning royalties on prospective ground with a really good operator, with cash flow and a mill that's going to be hungry for the next little while. But just going back to, and we haven't touched on the sort of the history, the genesis of how we put this whole portfolio together. We purchased almost 40 royalties in Canada when we did our RTO with Eagle. And there's a ton of really prospective ground in Canada where we have a 1% to 2% NSR on a lot of the ground. One of them is on Trident, the Knife Lake deposit. They just put a extremely strong drill holes, not on our ground, but we like to see companies like that get the market cap recognition, probably get a much better access to capital, and they can look at expanding their drill program there. We also have a ton of exploration ground, like the Mount Poly extension. We have a bit of a postage stamp within the deposit at Skeena. I mean, the exploration upside on this portfolio is fantastic, and we'll continue to, ramp up as we see these things get farmed out, or in a hotter market like this, guys are getting better budgets. And the one thing I'll highlight, we haven't talked about Lavras actually. Sorry, I'll keep going on here. Lavras, we have 5,000 hectares. That is a well-capitalized company that does very well with the drill bit and has good access to capital. They've done an excellent job drilling things out. All of our operators have raised almost $300 million since we started the company. And that is the beauty of the royalty business. We don't pay a cent for any of this exploration or any of this expansion capital that goes into it. And we love to see these guys cashed up and ready to go. In fact, let's just talk about Banyan specifically. I'm pretty sure when we first started looking at the Eagle portfolio, their market cap was around 70 million Canadian. They've raised 55 million this year alone and expanded their drill programs. And that's just one example of sort of the beauty of that free optionality you get in the portfolio. So there's a lot of exploration upside on all these properties.
Drew, thank you for that. With the base portfolio here, the foundational assets that are paying right now or paying very soon, any guidance you can give us, I hate to use that word, but expectations outlook for 2026 on a gold equivalent ounce basis, anything you could tell the audience as far as how you're looking at 2026 shaping up, and maybe even if you want to finish up with 2025.
Yeah, 2025 is a ramp up year. And so we'll get 1 month of Madsen in September. We'll get all of the value from Bomboré as it comes along. We haven't issued formal guidance, but what I can point to, I mean, let's just use Madsen for example. 50,000 ounces is kind of their guidance for next year, or something that they've publicly stated as a target for them. We get a 1% on that. Bomboré, if you just take the minimums of 37,500 ounces of silver and use, 40 to 50 bucks an ounce, you can sort of get a sense of where that's going. The question mark is around Zancudo and how quickly they'll ramp up. But I think it's more important to talk about where we see this going. And I try not to get in too much trouble with the lawyers here, but we think this portfolio has a chance to do 2,500 GEOs in the next 2 to 3 years comfortably. And that puts us in the $10 million revenue line conversation. And I guess one thing I'd like to add to that while I've got the spotlight here is our corporate goal is to bring that $10 million revenue line closer to home faster than that, not just in 2026, but as fast as possible. We think that is an important number to be at the scale where you start to matter to institutions.
Most certainly. I think that's very good. And having that focus on early days cash flow and growing that to have a core foundation here. Like you said, the institutions also jump on board, the banks, the coverage, and everything else. So very much you guys have that strategy pinned down really good, Drew. So appreciate your comments on that. And of course, a little bit on your expectations, but folks can really do a little bit of work here with some of the company provided materials and come up with some rough numbers to start. And all of this is based on the statements from the operators. So we're just relying upon that information that's already out there in public. So not a big deal there. Really appreciate that. Of the focus area, Drew, just shifting gears here just a little bit, of these royalties and streams, any comments as far as mix of precious metals that you are targeting? You'd like to see a proportion there, maybe base metals fall in a little bit or the like. Any preferences on that? And then also any preferences on specific jurisdictions that you like?
Okay, let's start with metals. Right now, 98, 99%, I mean, call it 100% of our net asset value is tied to gold and silver. And that gives us a lot of freedom to potentially go and look at a copper, gold, or copper asset, just to use an example. We do sort of fall into that Lassonde level of thinking where you want to have 80% of your portfolio in precious to maintain a premium multiple. I think that's what people are buying our shares for. I think that's what we'll trade on the back of. So we want to sort of adhere to that loosely. We don't have a hard and fast principle from a board perspective. Expanding on that from a metal perspective, I kind of view copper as the third precious metal. And I'll explain to you why I think that. And the first is, I mean, the investor demand and the supply demand fundamentals are fantastic on it. But what we've seen, and this was part of an investigation that I did when the last deal actually I did at my previous employer at Metallo, was we bought a primarily copper development story called development royalty company called Nova. We actually noticed the influx of, other royalty companies buying copper streams and royalties, and the actual value disparity between silver, gold, and copper being quite tight. So empirically, we're actually seeing that copper doesn't trade at a huge discount. So copper would certainly be a metal that we would love to add to our suite. When it comes to the no-go metals, I don't want to make a statement that we won't do any weird metals, but I think we're principally focused on LME traded metals. Our institutional knowledge is tied to that sort of space. We don't know much about the lithium or the graphite markets, and we're not suggesting those royalties don't have any value. It's just not our focus and on our skill set. So that's from the metal perspective. From a jurisdictional standpoint, we're quite open-minded, but I would give it the caveat that we find sometimes the premium or the lack of discount on some less favorable jurisdictions doesn't necessitate really going there. And this is probably a bit more philosophical viewpoint, but we love buying royalties in Ontario on a high grade mine. I mean, that kind of risk reward, we're very comfortable from a permitting, from a legal perspective in Ontario. We find the discount sometimes in less favorable jurisdictions very close to that. And that's probably one reason why I typically in my career haven't transacted in sort of tier two jurisdictions. I don't want to say specific countries and offend anyone. But we're open-minded as to where and how we'll acquire royalties. And operating royalty in a tier two jurisdiction can provide a tremendous amount of value, particularly when you start evaluating the length that the operator has been there and potentially, the quality of the counterparty. And we'll just use Burkina Faso as an example, because sometimes we get some pushback on the ore zones stream that we have there. They've been operating there for a long time. They've done a terrific job and they've had no security issues. I'm not suggesting Burkina Faso is Quebec, but that kind of risk reward proposition, we were quite excited to get exposure to. So fairly open-minded, I guess, is the short answer to what I'm surmising. And LME traded metals is probably going to be our principal focus going forward.
Excellent, Drew. Thank you for that. I think that proportion's about right. The minimum 80% target there. Jurisdictions are fairly subjective. You and I can think of a lot of reasons why there's certain provinces in Canada that used to be tier one that are heading back down to tier two and three.
Mm-hmm.
Compared to some of the African jurisdictions, you and I can think of some great ones. Namibia, for example, that's a great jurisdiction there. Ghana, Cote d'Ivoire, Burkina Faso, they all have their pluses and minuses, but to eliminate Africa from the list, I think is a mistake. And I think you have to maintain some of that leverage to some of those projects and some of the features that they offer. There's a lot of positive things about those jurisdictions. Moving down Central South America, for example, as well, some interesting stuff. Europe's a mixed basket, quite difficult, but North America also has some features in certain places. So I think you've got that about right, and looking forward to seeing what other jurisdictions you guys continue to add as you fill out the portfolio on the jurisdictional front, and then plenty of gold copper deposits out there. So going after a little bit of energy metals like copper as the leader in energy metals, very important, and avoiding interesting, odd little niche markets. I'll add uranium to your list of stuff that is just not something that a royalty company probably needs to worry too much about. There's better opportunities. And so good information on that. And you guys really sticking to your knitting, which is a good thing as well. Well, why don't we talk capital structure of the company here, get a little bit of information to the audience on that, cover the current cash on hand, where you guys stand there, the balance sheet as far as debt or what have you, and then also the shares outstanding. And then lastly, I think an important one, major shareholders on the roster, including management and the board.
The structure is quite tight, quite clean. When we acquired Eagle or did the RTO at Eagle, we did take on some of their options and warrants. And the reason I want to highlight the warrants is there's 1.1 million warrants at 250. Our current share price is $1.20. So if those are in the money by May when they expire, we've done an extremely good job, and we endeavor to actually trigger those. We have not issued any warrants in the history of the company. There's 71.2 million shares outstanding. We just issued some options and RSUs. There's about 77 fully diluted. Those are almost entirely held by management and insiders from the diluted security standpoint outside of Eagle. We have not issued a single warrant. We have raised all of our money at 90 cents Canadian to date. Cash on hand, we haven't formally put out our Q3 yet, but we expect to have 3 to 3.5 million comfortably US of cash on hand. We have that aforementioned silver receivable that is worth, 70,000 ounces, pick your silver price, but we think that's worth at least $3 million. From a working capital standpoint, we can comfortably say we'll have over 5 million. One thing I will say though is that for us to do any larger transactions, we will have to come to market. And I like that for two reasons. One, it enables us to get the shares up and get a better multiple, so to be a little less dilutive to existing shareholders. But it also provides some discipline that we have to actually, get permission from the market in some respects to transact when we want to. Shareholders are excellent. Management and directors make up 15% of the company. IAMGOLD makes up 17%. Institutional makes up 30%. Retail, which is principally high net worth retail guys that are almost mini institutions themselves, are 22%. And more importantly, Eagle shareholders make up 16% of the company. And I'm highlighting that before I talk about the institutions, because when we acquired Eagle, it had 38 royalties in it, 3 million Canadian in cash and receivables, and 3,000 retail shareholders. Now, some of those retail shareholders are selling right now, as expected when you transact at a premium. But we like that it gives us some liquidity out of the gate, which is quite typically plagued some of the more nascent royalty companies early on in their life. The institutionals ownership is fantastic. Adrian Day was our lead order on our inaugural finance with IAMGOLD. We also have Macquarie in there, which is not common to see from an equity standpoint. They also will be helping us potentially with some debt. Delbrook Capital has written a big check into us on 2 financings, we've also got US Global and Libra on the books, and then a small fund out of Toronto called Spartan Fund Asset Management. So we have a really deep-pocketed investors, guys that are well-known in the royalty space that have helped us along the way. And one thing I'd love to highlight with us is we did do all of this privately, and some of those funds actually have to get, I want to say permission, but they have to do a formal compliance statements in order to buy the company private. And they looked at the team. I didn't think they would play, and they did in fact come in and play in the placement. So we're quite flattered by the ongoing support we've gotten from them and the fact that they made an exception to their normal rules in order to participate in the financing.
Pretty tight setup here, and you guys have done a pretty good job with that, because you have some bigger IAMGOLD, for example, probably not one that needs to get rid of their shares, probably one that's going to hold their shares. And then, of course, you guys having around a 15% stake, I think, is a very good number. It's not a heavy number. It's not an extremely light number. It's just about perfect on size. And then, of course, you've got some sticky institutionals in there. With respect to you and your motivation, your incentive just talk a little bit about that, because I think that's important, because this is a company that you're really the leader and the go-getter on, so to speak. Just as far as options, RSUs, et cetera, what's your incentive drive here, Drew? Also a shareholder, just talk a little bit about your incentives to make this company really run.
My incentive is to make money for myself and our shareholders and do it in a ethical, moral, and aggressive way. At the end of the day, our alignment is probably one of the highest in the industry, and that's more on the basis that it is an early stage royalty company. I'm not suggesting other teams aren't heavily motivated, but right now, I mean, the goal of this company is to bring to market a cash flowing royalty vehicle with tremendous upside. We're trading at less than 0.7 times our net asset value. Our peers are north of 1.2 on a revenue basis. Next year, we're trading at, call it 6.5. Some of our peers are upwards of 20. So on a revenue and NAV basis, we want to close that gap. And the incentive for me right now is to get our paper re-rated as quickly as possible, which is not been challenging, because I think the royalty market is something that a lot of people are familiar with. But it has been, we have had some selling, and that kind of provides a really good opportunity for investors looking at early stage royalty investments. Royalty companies like this that are well structured, that we've put together, and I'm very proud of the team we've put here, is they outperform in every gold environment, from a flat to rising environment. And it's not because, the common perception is royalty companies are a get rich slow vehicle, and I know that's typically the case, but with this company, you have to think about the actual leverage that you get when these companies have access to capital. The fact that there's no dilution coming unless we buy any royalties. A lot of the companies that we mentioned earlier, they've raised nearly 300 million Canadian. They've diluted there. Our royalty doesn't change. That's probably my favorite thing about the royalty model. My royalty rate never changes on any of these assets. Whereas if you buy shares in the underlying companies, they do go down. So going on a bit of a tangent here, but my sole focus is to make the share price go higher. My sole focus is to keep our G&A tight. There's only 2.5 employees at the company right now, and is to provide investors with a really good vehicle that gives price participation as the metal prices go up, and real growth as these operators continue to execute on their plans.
Drew, thank you for the comments. I think that's right on as far as the alignment there. 2.5 employees, well, you might make up 2.5 of those yourself, and maybe a few consultants. So you mentioned potential for assistance via debt, equity financing, that mix of how you guys fund some of that growth or M&A transactions out there that you might be looking at in the future. Would you basically be considering a little bit of everything in terms of a mix of debt, maybe a revolver, equity financing, also shares? In some cases, you might find a counterparty who wants Summit shares because of the upside that's available. What are your thoughts on this?
You nailed it. Where I think we have an opportunity to not just compete, but also differentiate ourselves greatly from our peers, is the ability for us to use our shares like we did with IAMGOLD, like we are trying to do with other opportunities right now. If anyone of your listeners are familiar with a company called Mavericks, they did one treasury offering in the beginning, and then they did transactions with Newmont and then the Goldcorp portfolios. They did 2 deals with Newmont, they did one with Kinross, they did one with Goldfields. They were able to increase the scale of their royalty portfolio, increase the cash flow from it, and provide investors and some of the guys that been in the projects an opportunity to get that re-rate. We have that ability right now. We're under $100 million market cap. And some of these large companies we're not targeting, they're actually calling us. They're not looking for cash. If you think about the majors right now that have some of these portfolios, their balance sheets have never been better. And at this point in time, they're looking for smart ways to monetize their royalty portfolio. Let's just take IAMGOLD, for example. IAMGOLD is I don't know if it's a $5 billion company today. This royalty portfolio was an afterthought. There's no lines in the analyst numbers. So the equity line is something that we're going to use quite aggressively when we do look to acquire some of these portfolios. But the one thing about this team, and we haven't talked about it, and I'm sure we'll get to it in a second, since closing on IAMGOLD on May 30th, we have put out over $200 million worth of bids on operating royalty portfolios. So this isn't a small company that hopes to just hit singles and get on base. We are actively bidding for transformational assets in the portfolio, and that's where the combination of debt equity in the company, and as well as us going out to our existing institutions and bringing in new capital is coming to the forefront. So we're not afraid to take big swings at properly constructed portfolios. And we're going to continue to be aggressive. That's the one thing that I think, if you look at the cadence of what we've acquired our assets with already, look, in just 4 months, we did a deal with a major company called I Am Gold. We had $250,000 in the bank. We did an RTO with Eagle Royalties, and then we bought the Madsen portfolio. We had to create the company, create the financials, ratify the board. Like, we are a fast moving team. We're lean, and it's been an exceptionally fast growth. We are, by definition, going from 0 to 47, the fastest growing royalty company on the planet. I know that's kind of a cheeky car salesman line, but we're proud of what we've done. And yeah, don't second guess us that we're going to keep sitting down on the smaller transaction sizes at all.
Very good comments there, and certainly well aware of the Mavericks folks and that example you gave there. So that's great. I want to move just quickly here over to folks at the company. It's a short list. Folks at the company supporting you and your vision for the company, of course, maybe some consultants as well. Just cover off the key staff you'd like to mention.
So I talked about myself earlier, and I won't go through that anymore. The first employee I hired was Connor Puglisi. Connor came from Triple Flag. He was there for 4 years. He was a former investment banker for 4 years before that here in Toronto. He has been a great right-hand man. He was plug and play right away. He knew exactly what to do. Between the two of us, you've got nearly $2 billion worth of royalty transactions. So what you've got is a young, hungry team. Connor and I are certainly on the younger side of our careers that are out there and know how to find and close deals. Connor's actually over in London right now marketing the business. So he's been a great complement to myself. We've got a CFO named Bob Doyle. He's a part-time CFO. He's got over 40 years in the space. He's been a great addition. And then we've got Rick Breger, who acts as our technical advisor. He came from Core and I Am Gold, and he kind of acts as a conduit between the technical consultants we employ and the capital market side. He's been a great asset to the team. The board I'm particularly proud of. It's a really good marriage of royalty experience at capital markets. Our chairman is Gerald Annette, no stranger to most people. He did 10 years, almost 10 years rather, of mining sales at Scotia. He then joined Richard Work's stable of companies and sold Arizona Mining for $2.1 billion. He then went and took the senior vice president strategy and capital markets at Capstone Copper. That stock went from 60 cents to $10. He concluded his tenure there, and I think it was close to $3 billion worth of secondaries and M&A transactions. Just an unbelievable Rolodex. Steve Eddy's also on the board. He came from I Am Gold. He's no longer there. He's currently the senior vice president of Blue Moon Metals. He's done billions of dollars of M&A and divestitures. He's a great guy to have on the board. Russell Mills is a known investment banker in the space. I've done tons of deals with him over the past. Great advisor. He was the #1 producer and managing director at PI Financial. He started his own merchant bank, and this is his first director seat. And then rounding out the team, we've got Blair Zawitsky from Osisko Mining, formerly of Osisko Mining, rather. He was the CFO of Osisko Mining before Goldfields bought it for over $2 billion in cash. He's now the CFO of Osisko Metals. He has a ton of experience with running these companies. He's actually the first board member I put on because from an administration standpoint, getting the accounting set up and the D&O insurance and all of that sort of stuff that I think most investors overlook, he's got a wealth of experience in it. And then not sort of mentioned in the deck, we've got excellent legal support from Bennett Jones. We've been working with Haywood and other brokers on the street. So it's a really, really good team. And the last observation I'll make here is almost everyone I just mentioned on this roster has built or has run billion-dollar companies. So this is, 50 million US today, maybe 55 million US today. This is a team that knows how to scale up really quickly. The only people taking a salary right now are Connor and I, and then we've got the part-time CFO. So it's extremely lean, and it's got a very motivated team. All of these guys have written checks in at every financing as well, including myself. So it's a really well-aligned and well-oiled machine.
Good to have those folks on the team, Drew, and certainly good to have those folks back there assisting, providing their insights and consultancy as you continue to lead this forward. So I appreciate you going through some of the staff over there, and definitely well credentialed. Any immediate plans on additional listings, such as maybe a US OTC as you guys get moving? I know that this is pretty fresh and new out of the gate here, so maybe this is down the road. And then with that, just in the future, as the company grows, a couple of years down the line, what have you, is there a desire to look at listing upgrades as far as TSX Big Board or maybe NYSE Amex? Any comments there, Drew?
Down the road with the right size and the right revenue profile, we'd love to list on the NYSE. We did that at Metalla, and we really enjoyed the increased liquidity and the enhanced sort of capital markets profile that comes with it. Right now, we're a tier one issuer on the TSXV. The company we took over was on the CSE, so we did uplist a little bit in the process of going public. The OTCQB listing is something we're actually actively looking at right now. The company started trading, what was it, 9 days ago? So, one thing at a time. The website was launched less than just over a week ago. So we've got a very long to-do list, and I'm not trying to make excuses, but that is certainly something we're going to look at down the road. From an uplisting standpoint, we think the American market, and more specifically the generalist American investor, this is the right product for them. Royalties are inherently less of a resource specialist fund type product and more of a generalist product because they are diversified, because they have cash flow, they have low overhead. And we think the American generalist and quite frankly, the European generalist gravitate toward this product when the market comes back. And I think we're in the early stages of the bull market. So there's a lot of thoughts along that lines right now.
Sounds great. And in due course, certainly you guys are fresh trading here, so let it saturate a bit and you guys will get to that. But main focus is on operations here, so I can appreciate what you had to say there, Drew. Why don't we wrap up for this introduction? For potential investors who are listening in, Summit Royalties has a market capitalization of about 70 million Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors portfolio at this point?
Well, the short answer is we're the cheapest royalty company in the sub-billion dollar space that is cash flow positive today. So the valuation side of things, we talked about the NAV, we talked about the cash flow. It's an excellent value proposition. You also got to take a step back and look at the potential outperformance that we think all of these assets have, particularly, Ormac and Madsen and some of these things as they ramp up. This is a cash machine that is going to only get better with time, particularly with all of our counterparties raising all this money. We think the stock is extremely undervalued. Royalty companies almost never trade at a discount for a long period of time, and we don't think someone's going to be any different than any of our peers. We think it's a fantastic opportunity to get long, as anyone can look at, and we don't have it in our current deck, but we have put it in some of our marketing materials in the past. Early royalty company investments pay out in dividends. And one of the biggest complaints we get from the institutions is royalty companies always trade at a premium. This will trade at a premium to NAV in time. That is our goal. That is our stated goal. And right now it's a bit of a bargain. And that's simply in the basis of we have not got out marketing yet. We have not gone out and done the road shows. I've got 2 desk presentations tomorrow in Toronto. I'm meeting with a couple other funds when I'm in Toronto tomorrow. We're just simply not on everyone's radar. This story is resonating very well. So you have to believe in our ability to expand this portfolio. You have to believe in our ability to communicate this unbelievable portfolio that we have with us. And I think we're going to deliver that in spades as we continue to roll out this marketing efforts, as we continue to expand the portfolio. It's an extremely compelling time to get involved. I encourage anyone to reach out to me. Should they have any conversations, my email, you can email me anytime, is drew@summit-royalties.com. And the website is www.summit-royalties.com as well.
Drew, thank you for that. That's a good way for folks to reach out for further information. Thank you for sharing that information as well as your email. Looking forward to following this. It's something certainly that we're watching along here and looking very hard at. Thank you for the time today to introduce Summit, and we're looking forward to having you back again soon for more updates on company progress.
Thanks a lot for having me, Andrew.